Hey, what is up, guys? My name is Abir, and you are watching Money Matters, where you take control of your finances. So, in this video, we will talk about the top stocks to buy and also dollar cost averaging and why everyone stress it so much. So, if you are new to this channel, I make videos regarding personal finance and stocks and basically overall investing strategies and how you can make wealth by working a full-time job or some money that you have on the side. So make the money work for you. So that is the strategy we are going with. And as I said, like in this video, we will be talking specifically about dollar cost averaging and also the top stocks. So first, let's talk about dollar cost averaging. So what does that mean? Dollar cost averaging means that you basically buy any company's stock during thick and thin, like all the times in the market. So you basically keep investing your money whenever you get a chance, preferably every week, if not then at least every month. And that way, basically what you are doing is you are riding the market value of the stock. Say for example, today a stock worth $2,800, tomorrow maybe the price goes down a little bit, and if the price is $2,600 and you buy another share of that, so you basically got two shares for $5,400, one at $2,800 and the other at $26. So you basically, the average cost comes down to $2,700 and the current price may be 26, 27 or 28. But overall, when you talk about these stocks, the cost that you will be incurring by doing dollar cost averaging is cheaper than you will do one-time buy or something like that. So that's the basic bare bones of this strategy of investing. And how it works is basically there are multiple index funds where you can invest, and those index funds have multiple companies under their infrastructure. So say for example, a company, an index fund, take an example of Invesco with the ticker symbol QQQ, and this basically tracks the NASDAQ 100 companies. So if you follow this, Invesco Trust QQQ is tracking the 100 companies. So they invest in 100 different companies, and when you are investing in buying one stock of QQQ, you are basically investing in 100 different companies at different levels. So maybe some of the companies have a 12% weightage, then we have Microsoft at close to 12, then we have Amazon at close to 10.5% weightage in the portfolio. So all these companies combined makes this one stock QQQ. So when you do dollar cost averaging, you are basically investing in all these stocks and buying them when their value was high, and buying them when currently if their value is low. So you are buying the stocks and mitigating all the risks that are associated with high price or low price. The biggest advantage I wanted to discuss with dollar cost averaging is you need to understand that overall the trend of stocks is going up. So say for example, if you buy an stock as an Invesco stock at $25, say for example, today, the overall trend says that maybe 10 years from now the stock value will go to 100, and then that 100 value, if you keep on riding the wave of dollar cost averaging, at the time of $25 you bought a share, at the time of $26 you bought another share, $27 you bought another share, the overall cost will be way less than the end cost of the stock. So say for example 10 years have been passed now, and the stock price is currently $100. So now, since you have bought the first share at $25, then $26, then $27, combining those together, and say for example you have bought 75 stocks of those 75 stocks, probably you have contributed $65 or $66 for each single one of them, but the stock current value is 100. So $75 per stock, and then 100 stocks, $7,500 is the worth of your portfolio, but you have invested only $6,600 for buying those 100 stocks. So this is basically the overall advantage of investing in index funds, as well as doing the dollar cost averaging. So index funds basically do the same thing, but they manage a different company, in this case Invesco, manage all your money while you invest and buy their stock. So another important video that I am working on, I am really working on it really hard, and it's been quite a journey. I've been calculating and collecting a bunch of data from different resources to combine and make and put up in that one single video, which I'll be releasing soon. What that video will do is basically give you guys a good idea of what are the top 10 stocks in the market to buy any time of the year. During recession, doesn't matter if any calamity happens or anything bad happens, every time you get invested in those 10 stocks, and most likely you are going to come out as profitable. So moving on, we have multiple we have opportunity to invest in multiple stocks out there. These index funds basically are a good source to start with, because they track different stocks. If you buy one stock, you are investing in 100 companies in this case. So over 100 companies you are investing with buying one stock. So the risk of investing and losing your money decreases a lot. So Invesco is one of the best index fund, and it has been outperforming other index funds lately. So we'll go through the reasons why it is outperforming other index funds, and that will be another topic of some other video. But for now, Invesco, Spider 500, S&P 500, they track the top 500 companies, precisely 506 companies currently, and the ticker symbol is SPY. Then we have Vanguard. Vanguard is ticker symbol VOO. They are also tracking the S&P 500, and ETF is exchange rate fund. We can have different videos on explaining these. What is the difference between an index fund? What is the difference between mutual fund and all of that? So all those good stuff we can discuss later. But for now, if you are a beginner investor, these are the three companies that you should invest in. Basically, these companies will manage your portfolio, will manage and will invest in 510, 504, and 104 in different companies, and they will basically divide your money in those companies, and you grow with time overall. So that's about it for dollar cost averaging. If you have any question, I would love to answer your questions in the comment section below. Don't forget to leave a comment under in the comment section. And now let's talk about the stocks to invest in right now. We have seen some crazy gains especially in Amazon and Tesla today. Close to more than 4% gain is crazy for a company this size. They have seen multiple $billion coming in just through the stocks in one day. So you cannot go wrong with investing in Amazon, Microsoft, Apple, Facebook, or Tesla right now. And these are premium stocks, and I believe that more companies are gonna start buying these stocks as the companies grow. Another important part and reason that I think the Amazon stock went so crazy today is the market outside of US. So we all know that market within US is very positive and have very positive attitude towards Amazon, seeing it going and destroying basically other businesses. But outside of US, there is a big market as well, and that market is famous because of Amazon. So that Amazon has now targeting that outside of US market, or you can call it international market as well. So that's a big thing. And I remember 4 years back, 2016, end of 2016 and beginning of 2017 was the same thing with Bitcoin. A lot of people started investing in Bitcoin, and the price of Bitcoin was the same as Amazon's price right now. I'm pretty sure we're not gonna see that kind of gains with Amazon that Bitcoin has seen, but still, this is a very reputable business, number one in the world after Apple, and the market value is close to $1.5 trillion. And you see, like just investing in $200 here, I have seen $22 gain already. So it's a company that you can trust. It's a company that is still growing at a rapid pace. It's a company that is not going to go bankrupt or anything in recession. So this is one stock that I think you should still be able to invest in. And in my personal and humble opinion, I think the stock will definitely go past 3,000 real soon. Maybe not in a day or two, but maybe next week or the week after that, or even after we see a downtrend. But still, eventually, I think before the end of this year, we will see the stock price going close to $3,500. But then again, it is just my opinion. I'm not giving you any financial advice here. I'm just stating what I believe, and I think this is completely my opinion, and you can definitely disagree with it. With that said, thank you guys for watching. I hope you guys like this video. If you have, make sure to hit the thumbs up button and share this video, and be interactive. Please leave me a comment or a like, or even a dislike would work, and I'll try to promote more of my content to you. So thank you guys for watching. I hope I'll see you guys in my next video. Till then, take care of yourself and people around you. Goodbye.